Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Monday, May 5th, 2014. Happy Cinco de Mayo to everyone. Hope everyone has a margarita in hand as they watch this video. All right, number one, markets basically flat on the day. Interesting because we saw a pretty significant gap down this morning, but very quickly the Federal Reserve stepped in with some POMO, 2 billion in POMO to be exact, and popped the markets right back up. I thought it was really interesting. I haven't said this in a long time, but I thought today's price action was very contrived. It was very much controlled by who else but the Federal Reserve, as I would suspect, as the markets again were very close to a big breakdown beginning. And I thought the breakdown actually started on Friday at the highs right here. All right, remember, we had the jobs numbers, the non-farm payrolls numbers that came in at 288,000, and the unemployment report, which dropped from 6.7% to 6.3%. That's a big drop, okay? All right, that's a big drop right there. So something to keep an eye on. And what you have to understand here is when you see a drop like that, you need to look underneath the numbers. What's the cause? All right, why are we seeing that type of drop in the unemployment report? And the essence of it was that initially the headline numbers looked great. When you looked underneath the numbers, you saw that many people dropped out of the workforce 100%. They basically dropped out of looking for jobs. And remember, when you don't look for a job and you're not employed, you're not counted as unemployed. So, if, for instance, if I don't have a job and I'm looking for work actively, then I'm considered in the unemployment report. All right, that number is reflective of me. If, however, I just say, you know what, I don't really feel like looking for work this month or next month or maybe any months, I'm just going to not look. I'm not counted as unemployed because I'm not actively looking for work. So it's kind of a worrisome thing here that, supposedly the Fed's pumped this much money, 4 trillion into the economy. The Fed on last Wednesday's FOMC statement said the market was doing great, the economy was doing great. They cut back another 10 billion in stimulus, but really the fact is the numbers, at least economically, aren't confirming what the Fed has said. And I think this is the bigger issue here is that the Federal Reserve, what do you really expect them to say? All right, the Fed knows that the money printing is not working. It's not doing a damn thing right now. So obviously they're going to stop it. Now, can they say, oh, by the way, our printing of money isn't doing a damn thing? No, they can't say that. So if they're going to withdraw money, they need to lie and basically say, hey, listen. All right, they need to say essentially the economy's strong enough. They have to use the term strong because it makes people feel better about them withdrawing the stimulus. The economy's strong enough for us to withdraw this, so it's okay. And that's what kind of initially, I mean, if you look at the jobs numbers on Friday, at first glance, they seemed great. When you looked under the hood, they didn't seem that good, and that's why the markets trailed off. And then last night, we got the not GDP, but manufacturing data from China, which was very poor. Very poor manufacturing data from China. The futures were lower. We opened lower, and then the Fed stepped right in here using some of that money they're printing to prop the markets up. And one of the reasons you know this was a prop job, well, number one, it was at support. So, I mean, there's a reason why you got a little bit of a bid here. But this move up, very controlled. If you look, green candle, big green candle, pause candle. Green candle, pause candle, green candle. All right, and that basically took us right back to gap fill right here. So very controlled. I mean, the market's perfect in many ways, but it's not that perfect. You know what I'm saying? So for me, this was a very obvious signal that they were controlling it as they lifted it back up. And then notice how once you got back to the flat line, they went into maintain mode. And maintain mode is where they say, all right, well, let's just keep the market kind of going sideways here. It doesn't have to pop anymore. We're not going to necessarily push it up anymore, but just don't let it drop back down, really. And that's what they're doing here. And then the market just goes into sideways mode right here. They're keeping it in a tight range. So my belief is this. The combination, the market's reaction to the jobs number on Friday, realizing it wasn't that good. Then you had the Chinese economic data, which opened us down here. I think the Fed was a little bit worried that there was a bigger issue here, that the markets could start another phase of downside action, which again, eventually it will, regardless of what the Fed does. But at least in the short term, that's what they were thinking. And ultimately, this is what we have. We have a market that's flat on the day, slightly negative right now. At Dow's down 10 points, S&P's down 40 cents, Nasdaq's down 50 cents. So again, flat as can be. One stock that's on my radar here, HDY. Look at this move today. This is a an oil play, and it's up basically 160% on the day. Just a tremendous short squeeze on this stock to the upside. If we take a look at the daily, look at this daily, guys. Stock was beaten down, and then look at this move. Interesting, it's piercing the 200. A sympathy play. I don't know if these sympathy plays go right now because the market's for small caps not great. But keep an eye on this one right here. Ivan, IVAN. Basically a same price stock. Look at how far it is down. So that's something I would keep a close eye on Ivan here. All right, so that's what we have going on there on Ivan. All right, what else do we want to look at? JP Morgan Chase getting hammered today on bad news. So JPM taking a nailing here. The guys, the pro traders that run the service on our website, inthemoneystocks.com, called the Elite Roundtable, had this as a short off this bearish pattern last week. They made a lot of money for members of the Elite Roundtable. Great job right there. So you can see the drop right there, and they banked a nice chunk of change on the drop on JP Morgan there. Nice drop there. Financials overall are very weak on the back of this news. As you can see right here, Goldman Sachs is down also about almost 2%, $2.91. So financials are weak. If we look at technology, let's take a look at some of the tech stocks. Apple's up about $5 here on the day. So a little bit of a move on Apple. And again, this stock is trying, see the consolidation. This is actually bullish consolidation. It's trying to get through 600. It's been up multiple times kissing the 600 level, hasn't been able to bust through. I actually do think it does get through 600, especially with that consolidation pattern in place. And again, where's the next spot it's going to go to? My guess is it's going to go here, right around 615, 620, right up here on Apple. All right, am I long Apple? No. I mean, it's too extended for me to go long. I'm just analyzing the chart where I think it's going to go. And again, if it was a higher reward, lower risk trade, I'd get on board. But there's too much risk involved there because what you have to recognize here, and this is more into PPT analysis, but if this stock were to get bad news, it could fall very quickly back down here. I mean, there's a huge move up. And your upside reward is only that. So if you draw a line from where current price is to your upside reward here, and then your current price to your downside risk, it's all the way down here. Notice how that line to the downside is much bigger than your line to the upside in terms of profit. And even though I still think it's going to go to 615 or so, 620, it's not enough reward for the risk that you're taking on. And every trade you take, whether it's a swing trade investment or a day trade, you must analyze those factors. You must analyze to see whether or not the risk is worth the reward, and vice versa. Is the reward worth the risk? All right. So that's a stock that's actually doing pretty well today. Let's take a look at a couple other technology stocks. How's Amazon doing today? Amazon's basically flat on the day. So anytime you see a stock that's flat and the market's flat, it just tells you it's going with the market right now. Do I think there's more downside down the road on Amazon? Yes, I do. I think it'll go below the 300 level by a decent amount. But really in the short term, as long as this market is flat, Amazon seems to want to perform at the market. And this is the level, by the way, this is one level I'm looking at on Amazon, and this is two levels. So you have this level and this level, two good levels on Amazon. One's at around the 280 level, 281, and the second one down here is at the 263-ish, 262 level, somewhere in that vicinity. All right, another stock, let's take a look at Baidu, B-I-D-U, Chinese play here. After the Chinese economic news, you can see Baidu is down just a little bit on the day, 1.25% or about $2. How's Sina doing, S-I-N-A? Yeah, Sina's down a little weaker, although it's off its lows today. You can see Sina's trying to put in a bottom here. See these tails? One tail, and then it came back down, two tails, and then opened lower and then bounced up. So it's actually trying to put in a little bit of support here on SINA. But I don't think at this stage it's really, it hasn't solidified it yet. You need to see that next move up where it gets off these lows. And if you get that follow-through day, notice how you're not getting that. So you popped up and then kind of stalled. Popped up, stalled, came back down, and then popped up again. You need to see that follow-through day. You get a follow-through day on Cena. It actually looks very intriguing at that point. So just another thing for us to kind of continue to watch. All right. Let's see what else we have here on the charts, guys. A couple other stocks I wanted to go over. How are some of the social networking plays doing? Twitter is basically flat on the day, so that's in line with the market. Facebook today is up 64 cents. Not bad. Facebook actually starting to make a little bit of bullish consolidation right here. Still needs a little bit more time to cook, but definitely something to keep on watch. And we can take a look at Yelp today. Yelp's taking a small hit, although it's off its lows down about 85 cents. And LinkedIn, which got hammered on Friday off of earnings, is actually bouncing back decently. It's interesting how it gapped lower today and then recovered and is actually green on the day. So something to keep in mind there as well. All right, so that's all I'm really seeing right there, guys, on the charts, and trying to see if there's anything else I want to mention. I think that's about it for now. We're still seeing a decent amount of strength in the safe stocks. If you look at stocks like Chevron today, Chevron's up about 93 cents. Chevron reported earnings on Friday morning, which were ugly. I mean, they just weren't good at all. Missed on revenue, missed on earnings. But because it's a safety stock, it's still holding up there. It has this topping tail right here, which is good resistance and a good signal of a top. But you can see that even off of those earnings, there's still buyers willing to put their money. I don't understand it. I mean, basically, Chevron came out and said, hey, we're not going to grow as fast. We're not even growing really anymore. But people are just so consumed right now with lowering risk and finding those dividend paying stocks that this stock seems to be able to hold up, at least in the short term. We'll see if it's able to hold up, once the market really starts to get scared again. I think it'll come down very, very quickly then. But something to watch, anyways. Okay? On that note, folks, I'm going to bid you all farewell. Have a great afternoon, great evening, and I will talk to you soon. Take care. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial. Remember, 7-day free trial to the Research Center or the chat room. If you want to join the Elite Roundtable, where they just gave that awesome play on JP Morgan as a short that they made lots of money on, feel free to join there as well. No free trial for that service, but it's there for the taking. So take care. Come join us and make plenty of money here at InTheMoneyStocks.com.